Most people focus on how much capital they hold. Fewer people think about something equally important: access. Because capital can exist while access changes. Access risk. In the previous episodes, we examined currency, jurisdiction, tax environment. Now we examine something less discussed: access. Capital controls are restrictions placed on the movement of money, across borders, or within domestic banking systems. They are uncommon in stable environments, but history shows they can appear. Historical context. Let us consider a few historical reminders. In 2013, during the banking crisis in Cyprus, temporary capital controls were introduced. Withdrawal limits were imposed. Cross-border transfers were restricted. The financial system stabilized later, but for a period of time, access changed. In 2015, Greece introduced capital controls during its debt crisis. Withdrawal limits were applied. Transfer restrictions were enforced. Again, temporary, but impactful. Across various emerging markets over decades, foreign exchange restrictions have appeared during periods of instability. These are not predictions. They are historical reminders. Access risk exists. Now pause for a moment. If you needed to move capital across borders quickly, could you? If your primary banking relationships exist within one jurisdiction, is access diversified or concentrated? Structural optionality. This discussion is not about expecting crisis. It is about maintaining optionality. Access diversification may include holding accounts in more than one stable financial center, using internationally domiciled investment platforms, ensuring legal ownership structures are clear and portable. The objective is not complexity. It is redundancy. Redundancy reduces dependency. Regulatory shifts. Even within stable countries, access conditions can evolve. Banking regulations change. Reporting requirements expand. Transfer procedures tighten. These changes are rarely dramatic, but architecture benefits from flexibility. Now reflect quietly. If your primary financial system experienced disruption for 3 months, would your capital remain operational? Or would you simply wait? Waiting may be acceptable, but only if it is a choice. Access risk becomes stress when no alternative channel exists. Global capital positioning is not about escape. It is about options. Options create calm. In the next episode, we examine multi-jurisdiction positioning. How capital can be layered across systems, without unnecessary complexity, without over-engineering, just thoughtful structural design.